In a single day of trading during the global financial crisis, one company lost $895 million. But it wasn't because of bad news. It was because of no response to the bad news. Hi, I'm Elliot. I've got over 14 years of experience working with crisis and risk communications across the public and private sectors. And in today's video, we're going to dive into this company and how their refusal to actually comment about the terrible news that was occurring during the global financial crisis led to nearly $1 billion wiped off their company's value in a single day. We're also going to look at how they could possibly have prepared or prevented this, and look at how you can apply these techniques in your business. In early 2008, Wall Street was on fire. We had the Bear Stearns collapse, and then we had a JP Morgan fire sale. And amongst all this, Lehman Brothers seemed to be the next big company that was under threat. They were under immense pressure, but they were initially holding. They had a relatively strong earnings report at one point, and it seemed they were going to be able to dig themselves out of a hole that they quickly found themselves in. Then the Wall Street Journal broke a story. Lehman Brothers, well, they were looking to raise capital. During the GFC, if you were a bank looking to raise capital, it was a signal to the market that you were in trouble. But it wasn't just this story that was the problem. Many companies have issues when they are raising capital and they're under pressure. But what actually happened and what caused this to be a crisis was what happened next. At the time, the boss of Lehman Brothers was Richard Dick Fuld, and he'd given most of his investment banking life to the company. He was very, very protective of it. And when this story broke through leaks to a journalist, he thought he'd been stabbed in the back, and he turned inward. He declared that no one at Lehman should be speaking on the record to journalists. There should be no proper response, and he even banned his public relations arm of the firm from commenting at all. I mean, think about that for a second. The people whose jobs are to protect companies in times like this from reporting, or to at least address them, he banned them from speaking at all. And this is where the crisis really began. What happens when you ban your PR company or your PR arm from actually talking to journalists when you're under pressure from the media? Well, it's not that they stop talking. They stop being informed by you. You let other people control the narrative, and you lose complete control of whatever is happening out there on the ground. Without a clear spokesperson and no unified message, Lehman lost complete control, and their value kept dropping throughout the day. And quite often, silence can mean you're unraveling, but particularly during the 2008 GFC, if you weren't commenting, if you weren't trying to beat back the flames of the fires that were engulfing your business, well, the assumption was that you were unraveling. So let's go back to the start of this video. And as I said, $895 million came off the market cap of Lehman Brothers on that single day. And the vast majority of that money came down to the Wall Street Journal article that they refused to address properly. And just to reiterate, it wasn't because of the story in and of itself. It was because Lehman refused to try and change the narrative. They refused to comment, they refused to address it. And let's look at what followed from this. Now, the actual collapse of Lehman wasn't wholly down to a crisis communications strategy that either was ineffective or didn't exist in the first place. There were a multitude of factors, mostly related to the banking system in and of itself, and this isn't a finance channel, so let's not go down that path. But on the 15th of September 2008, Lehman filed for bankruptcy, the largest bankruptcy in US history at that time. Communications wasn't the only cause, but it definitely accelerated the collapse. I mean, when you're a bank that's already under financial stress, the last thing you can afford is to lose nearly $1 billion of market cap in a single day. A more targeted, a more systematic, even a plan or approach that may have kept Lehman afloat for a little bit longer and given them a little bit more time to find the money they needed to keep the bank upright. They didn't do that. They went quiet during a crisis, which is the last thing that any company should be doing, particularly when confronted with the type of money and reputational damage that Lehman had already gone throughout 2007 and the early part of 2008. For any company that goes through any type of reputational damage, silence isn't a strategy, it's a surrender. You're handing the mic over to everyone else in the room, the journalists, the general public, and particularly social media these days, when any part of a story, just a tiny fraction of it, can be picked up and run with. And it can damage your company not beyond repair, but it can take you years to earn back their trust. And I know you're thinking, Elliot, how does this apply to my business? I'm not a massive investment bank. Well, it's quite simple. Your initial instinct to any time someone would be to criticize you or your business would be to turn inwards and lock things down. So my advice is to actually prepare ahead of time, not during it. When you're in the middle of problems and the middle of a crisis, you're too busy to take time to actually work out how you're going to address this. And I get that. The actual operation of the business becomes more important. But that's why I've created a crisis response template, which you can pick up down below in the description. And it can guide you through the initial 60 to 90 minutes when that journalist first makes their call, or you have complaints coming from your customers. And you can apply this kind of across the board of business, whether you've got a product or a service that's malfunctioning or not working correctly, whether you've got an issue with financing your business, whether it's a reputational threat from a former or current employee. You can take this crisis response template, fill it out, and prepare it for your front desk staff, the staff that handle your calls. You can even work with your communications people and your executives on it. If you're looking for more information of what to do when a journalist calls, you can check out my other video, which tells you exactly why saying no comment is the complete wrong approach whenever a journalist calls. So don't forget to subscribe and like, and I'll catch you on the next one.